Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today I'm going to dig into rocket companies. This is a stock that I do own, and I think some of you do as well. It's been a little bit of a roller coaster ride over the past month or so. So I thought that I would give an update on where I see rocket company stock today, as well as where I think it's going to go, both in the short term and long-term future. Just a reminder that my stock picks and projections are just my opinion for your entertainment. Please make sure you do research and due diligence before investing in any stock. With that in mind, though, if you do enjoy stock market analysis like this, then please subscribe to the 40 Finance channel. Thank you to everyone who's supported the channel so far. And if you're interested in joining my email list, there's a link in the description. Right after you sign up for the email list, you'll get a free copy of my 15-minute stock analysis guide. It's a great little PDF with tons of free tips and resources to help you analyze stocks. All right, so Rocket Companies is the owner of Rocket Mortgage that you've probably seen a lot on TV lately because they've been advertising quite a bit. This is an IPO here in 2020. And it's one that I picked up on. I can't remember exactly when it came out, but I believe that it was early August. We'll check on that here in just a second. But long story short, the reason that I personally got into this stock, number one, because I have a deep experience with Rocket Mortgages because they actually handle the mortgage on my current home property. And then two, in my opinion, we have quite the bull case out right now as far as low interest rates and a housing shortage and the amount of people who have what they call tappable home equity is at all-time highs. So I see this as like a perfect storm, not only because Rocket is coming in from an IPO standpoint and we can get in early, but also just because the temperature right now in the mortgage market is perfect, right? As far as getting in, Rocket has plenty of room to grow. We'll talk about where they can do that soon. So all in all, for me, it was an easy choice to get in this one, and I'm still bullish for the long term. Quick note before we start on the charts, you can see my cost basis there at 1988. All right, so my cost basis at 1988, and you can see that as of Friday morning, this was trading about $20. It's been in and around this $20 mark for most of the week. But you look on the chart on the right, you can see here that this one came out of the gate at $17.50 or $18 or so. Then it dipped a little bit and reached a high of $31. And ever since that $31 high, it's been a slow but steady downturn. And now we're right back here, essentially at the IPO price. And even that's a little uncertain now because we just haven't seen a lot of positive life out of this one. Now, there's a couple things that could have taken the 31 down to 20. A couple things to keep in mind with an IPO. You have a lot of employees, longtime employees with the company who might have gotten into this stock as part of their bonus structure or whatever. They may have sold for personal reasons. You also have directors and other shareholders who may have just taken the IPO and sold out. So we know it's going to be rocky for the first 90 days or so. Not to mention that from a mortgage standpoint, not necessarily refinance, but from a net new mortgage standpoint, you're walking into the slow seasons, right? Which would be Q4 and Q1, winter, holidays, snow, not the best time to sell a house. On the flip side of that, though, if you have any interest in Rocket, then I would definitely be watching over the next 30 to 60 days to see if, hey, I mean, if you can get this thing basically at the IPO price. Let's take a look at all the metrics before we talk about that. Last thing on this screen you want to see is this earnings date, November 10th. I guess we got about 15 days or so, somewhere in there before the earnings date. I don't see any reason why that earnings call is not going to be a positive one. In fact, we have some speculative numbers already, which I'll show you here in a second. All right, let's take a look at the tip ranks analysts to see what they think of Rocket Mortgage right now. As usual, I sort by the 4 and 5 star analysts, try to get a feel from the best, so to speak, of these guys and girls. And you can see that you've got kind of a mixed bag, anywhere between $19 and $33. More holds than buys right now, which if you're not familiar, hold basically means you already own it and they're saying just wait, right? And buy means that they're saying establish a new position if you're interested. And then sell speaks for itself, right? So for right now, most of these folks are saying hold, likely for many of the reasons that I stated, a couple minutes ago about seasonality, etc. But that's where things stand from a professional analyst point of view. All right, so as I mentioned, with interest rates being low, there's obviously a lot of opportunity in the mortgage market. Now, we know a couple things about the mortgage market right now. One is that we know the new home sale market is pretty hot right now. Prices are elevated. You're almost for sure going to have to overpay, so to speak, right now to get into a house. And because home values are high and interest rates are low, we have this unique situation for Rocket companies because folks have a ton of what they call tappable equity in their homes. Meaning that say you had a $100,000 house and you've lived in it for 10 years. You've put $50,000 towards it over down payments and payments, etc. And that means you have $50,000 in equity. So one of the ways you can access the money that's in that equity without having to sell the home is to refinance your loan. And Rocket specializes in refinances because they are the leading refinance provider in America right now. On the new mortgage side, though, their positioning in the market is not as strong, and that's what they're working on. So there's a growth point there. I think only 2 to 3% of their mortgages, something like that, are brand new home purchases. So refinance is the game, and refinance right now is in a perfect position. You see in the highlighted box there, in total, nearly 45 million homeowners have tappable equity in their home, the largest volume, ever in history. The average homeowner now has nearly $125,000 in tappable equity, an increase of more than $3,200 from last year, also a record. And basically what you get here is as prices in homes go up and people just basically make the regular payments, but the price of a home, actually goes up faster than the amount of capital they put towards the balance, right? So it's a good situation if you're a homeowner, and certainly one of the easiest ways to build wealth, assuming that you can A, afford a home, and B, utilize a home in a productive manner, raising a family, things like that. Now, off to the right, the annual growth rate of tappable equity, you can see that's actually down 4.5%. It's still up. It's the growth rate, right? So 4.5% growth, but that's down from where it had been trending as early as 2019 when it was plus 9%. That's where you kind of get into some of this pandemic foreclosures, forbearance kind of thing. The nature of being classified as a distressed property brings the value down, right? So that's really what's happening here. Is it a cause for alarm from a Rocket stock standpoint? I don't believe so. I think it's just the result of this world that we're into right now, and the fact that these forbearances and potential foreclosures, they basically can't even be thrown on the books yet until some of the laws are changed about how you would do evictions, etc. So in some ways, it's speculation. And then you have to wonder what happens if it really does come down to forbearance or foreclosures. You go back to the left side where everybody has this equity, even if they're in a distressed status. Some of that stuff could work itself out in certain cases where employment and credit scores get resolved in the short term. All right, so this chart is just real quick what we learned about Rocket in the last second quarter reporting, which I believe was on September 2nd, something like that. Anyhow, in the yellow box, this was the quarter over quarter change that we saw. So Q2 over Q1. So in one quarter, Here's what Rocket did over the quarter before. Plus 40% on closed loan origination volume, plus 60 on gain on sale, plus 64 on net rate lock volume. And let me pause right there. Gain on sale margin is the difference between the loan they give out and the profit that they make on a loan, right? So I give you $100,000 as Rocket. That loan over the course of time is worth, let's just say it's worth $105,000 to make it easy. So the gain on sale for me is 5%. That's a super simple example, but you get the point. Net rate lock volume is the amount of people who apply and are approved and get their rate locked on a mortgage application. So pretend that it's Monday, you decide to go forward and apply. Your rate lock is that day. So if it was Monday and Monday's rate was 3%, you've put in your application and potentially deposit, you have now locked in that rate. So you're a very serious candidate to close a new mortgage. Hopefully that helps. Going back down the list, total revenue plus 268%, expenses up, but only up 24%, net income up 3,500%. And then, looking in the orange box, just to skip ahead, this is what Rocket is doing in Q2 compared to last year's Q2, compared to 2019. You're basically in triple digits for everything. This net income of NA is because they posted a loss last year. So you kind of ignore this one for now. Okay, so I mentioned in the beginning that we already have a concept of how this is going to go in the third quarter. And that is because Rocket included some guidance in their last earnings call. And this is right from that report, third quarter outlook. We expect the following ranges compared to the year earlier period. Net rate lock volume between 93 and 98 billion. That would be an increase of 98% to 108%. Closed loan volume between 82 billion and 85 billion. That's an increase of 100% to 112%. Gain on sale margins of 4 to 4.3%. That would be an improvement of 23 to 31% compared to the 3.29% that they posted last third quarter. So with all this in mind, we're not going to be biting our nails too much on that third quarter call. The only concept here is, can they hit the numbers? Will they go past them? Yada, yada, yada. If it's anything like they did in the second quarter, they'll go past them. But beyond that, it's just good to know, and from my personal opinion, it's just good to know they've already come out and said, look, we're blowing away last quarter. Third quarter remains to be seen, but we're expecting big things. And that's exactly what you want to see out of a growth stock. All right, so my 2 cents on rocket companies. Right now, honestly, it feels like the market is still trying to figure out what value they want to put on Rocket. That's my opinion. That's why you're seeing these wild up and downs. There's no reason to think that the November 10th earnings call is going to be anything but awesome. And maybe that sets it up a couple more points. Keep in mind, though, that they could also come out on this earnings call and say, hey, don't forget, Q4 and Q1 are miserable because it's wintertime. And so you may see nothing out of that, right? You're kind of preparing yourself for spring and summer of next year. No COVID, hopefully, no COVID, and continued low interest rates. And that's where you're really going to see that home bounce back if everything goes well. Third point on here that's important if you're following me at all, I'm holding through at least 2021, the bottom line, and it's likely 2022. I'll be watching the interest rates near the end of 2021 just to make sure I lock in any kind of profits, particularly if this one goes viral in the sense that, we see some crazy news out of the home market. But bottom line, I'm in it for at least another year. That's what I would recommend to anybody. And frankly, there's no reason this couldn't be a 10-year hold of some kind if it fits within your investing strategy. And who knows, maybe I'll keep it that way too. At the end of the day, though, I have a healthy portion of Rocket stock already established at $19.88. I'll probably continue to add small lots of 5 or 10. If the price goes under 20 again, you might see me pick off a few shares here and there. And of course, if we had some sort of massive dip, let's just say to 15, then I would probably add even more to manage that cost basis. But long story short, guys, I'm still feeling good about Rocket. It may not pay off next week, right? It may not pay off until spring of 2021. And that's okay for me. Frankly, it's better to hold the stock for me for at least 1 year to avoid the capital gains tax on short-term trades. So it doesn't bother me at all. But I know some of you folks have been asking. So this is my reply on Rocket stock. I hope it's helpful. If you enjoy this content, please give me a like and subscribe. Makes a big difference for this channel, and I appreciate it very much. We will see you on the next video.